Hey there, precious metals enthusiasts. Today we're diving deep into the silver market, exploring some groundbreaking developments that could reshape the global financial landscape. From Russia's bold moves to the Industrial Revolution driving demand, we've got a lot to cover. So let's get started. Let's kick things off with a bombshell. Russia has just become the first country to add silver to its central bank reserves. You heard that right, silver, not just gold. This is a massive shift in central bank strategy, and it's sending shockwaves through the financial world. Why is this such a big deal? Well, for decades, central banks have primarily focused on gold as their precious metal of choice. But Russia's move signals a potential sea change. We're not just talking about a minor adjustment here. This is a fundamental shift in how countries are thinking about their reserves. And here's the kicker: Russia isn't likely to be alone for long. We're already seeing whispers and murmurs from other central banks around the world. They're watching Russia closely, and many are considering following suit. This could be the start of a silver renaissance in the world of central banking. Now, let's talk about something that's got precious metals analysts buzzing: the gold-silver ratio. For those of you who might be new to this concept, the gold-silver ratio is simply the amount of silver it takes to buy 1 ounce of gold. Historically, this ratio has been a key indicator for investors and central banks alike, and right now it's telling us something fascinating. As gold prices continue to climb, we're seeing a potential pivot point where silver starts to look increasingly attractive. Think back to the 1980s. We saw a similar pattern where, as gold prices soared, public interest shifted dramatically towards silver. It was like a massive pendulum swing in the precious metals market. And folks, we might be on the cusp of seeing history repeat itself, but this time with central banks leading the charge. Now, let's talk numbers. For years, $50 per ounce has been seen as a major resistance point for silver. It's like a psychological barrier that's been hard to break. But here's where things get exciting. We're not just talking about silver hitting $50. We're talking about it blowing past that mark. Based on current market trends and the unprecedented moves we're seeing from central banks, we could be looking at silver prices of $100, $150, or even higher. I know that might sound crazy to some of you, but stick with me here. We're in uncharted territory, and the old rules might not apply anymore. Let's zoom out for a moment and look at the bigger picture of Russia's financial strategy. This move to add silver to their reserves isn't happening in a vacuum. It's part of a broader strategy to diversify their holdings in response to international sanctions. Russia has been steadily increasing its holdings of precious metals, including gold, platinum, and palladium, but adding silver to the mix. That's a game changer. It shows that Russia is thinking creatively about how to secure its financial future in the face of global economic pressures. And here's the thing: where Russia goes, others often follow. We could be seeing the start of a new trend in how countries manage their reserves, with a much greater emphasis on a diverse portfolio of precious metals. Speaking of trends, let's talk about what's been happening with gold. Central banks around the world have been on a gold buying spree. Poland, for instance, has dramatically increased its gold reserves. And they're not alone. We're seeing similar moves from countries across Europe, Asia, and beyond. Now, you might be thinking, what does this have to do with silver? Well, everything. As more and more countries pile into gold, driving up prices, we're likely to see a spillover effect into the silver market. It's simple economics. As one precious metal becomes more expensive, attention shifts to alternatives. But here's where silver really stands out. It's not just a precious metal, it's also a crucial industrial material. And that's where things get really interesting. Silver is a key component in solar panels, electric vehicles, and a whole host of other green technologies. As the world increasingly shifts towards renewable energy and sustainable tech, the demand for silver is skyrocketing. This dual nature of silver as both a precious metal and an industrial commodity makes it uniquely positioned in the current market. It's not just central banks and investors driving demand, it's also manufacturers and tech companies. Now, let's talk about recent market patterns. Over the past year, we've seen silver prices increase by a whopping 50%. That's not just impressive, it's downright explosive. But here's the key: this isn't just a short-term spike. We're seeing sustained buying pressure even during dips in the market. It's like a coiled spring, ready to launch silver prices to new heights. My advice? Keep an eye on those dips. They're not reasons to panic, they're opportunities to buy. The overall trend is unmistakably upward, and those who keep their cool during temporary downturns stand to reap significant rewards. To understand where we might be headed, sometimes it helps to look back. Cast your mind back to the late 1970s. We saw a major rush into precious metals with prices soaring to unprecedented levels. Now, history doesn't always repeat itself, but it often rhymes. And right now we're seeing patterns that look strikingly similar to those heady days. But here's the difference this time: it's not just individual investors driving the trend. It's central banks, major financial institutions, and global industries. If we see a similar rush into precious metals today, we could be looking at silver prices that make $50 an ounce look like pocket change. Remember how we talked about the gold-silver ratio earlier? Well, here's where that comes into play again. In 1980, as gold prices surged, we saw a dramatic shift in public preference towards silver. It was like a massive wave of interest crashing into the silver market. Now, imagine that same pattern playing out, but with central banks leading the charge. As gold becomes increasingly expensive, we could see a pivot towards silver on a scale we've never seen before. It's not just possible based on the moves we're seeing from countries like Russia, it's starting to look probable. Let's bring things back to the present for a moment. Recently, we've seen silver holding strong at $30 as a support level. That's hugely significant. It shows that there's solid buying pressure keeping prices up, even in the face of market fluctuations. But here's where it gets really exciting. We're now looking at resistance around $32.50. If, or should I say, when silver breaks through that level, we could see the start of another major upward trend. So what does all this mean for you, the investor? Well, we're living in exciting times for the silver market. With central banks like Russia leading the way, industrial demand soaring, and historical patterns suggesting major growth, silver is looking more attractive than ever. But remember, investing always carries risks. Do your own research, consult with financial advisors, and never invest more than you can afford to lose. That said, for those who are willing to weather the ups and downs, the silver market could offer some truly shining opportunities in the months and years to come. That's all for today, folks. If you found this analysis helpful, don't forget to like, subscribe, and hit that notification bell.